Hey everybody, my name is Justin. Today I want to do an update on Micron Technologies. They just released their last quarterly earnings and the stock has responded pretty positively from it. So investors in the market obviously thought that their quarter was pretty darn good. So we're going to take a look at that today, see what management had to say about their earnings and also what they're forecasting going forward. So today the stock was up around 2.7% after hours. It's up almost 4%. So like I said, investors are pretty happy about what they had heard. If we look at this price chart over the last 5 years, Micron stock is up 181%. So that is a 23% compounded annual growth rate, which is well beating the market. That's pretty impressive. Over the last 3 years, a 26% CAGR. Over the last year, it's actually down about 7%, interestingly enough. And this is a stock that I've been talking my channel for a year plus at this point. When I first started looking into the stock, I just really didn't understand it. I just couldn't get my head wrapped around it. This is a company that makes and manufactures memory chips. So DRAM specifically, that's about 73 to 75% of their revenue. They also make some NAND chips as well, which is around 20 to 25% of their revenue. And a lot of super investors, Moshe Pabrai, David Tepper, Li Lu, have bought into the stock. And unfortunately, it took me about 9 months to get my head wrapped around what this company does in the industry. And I missed out on already like a double on the stock by the time I got into it about a year ago. Now, this is a stock that I do currently hold in my portfolio. I do plan to hold until the story changes. The reason why I like Micron Technologies is that they are, they make memory chips, like I said before. They're in an oligopoly type industry, which means there's only a few players in it. There's only, in fact, only 2 other DRAM producers in the entire world, and they're both located in South Korea. So we have SK, and then we also have Samsung, where Micron is the only U.S. producer of DRAM chips. So I think that kind of gives them an edge on the competition, at least in the United States. And I think, with all the, variants from, the COVID strain, all that kind of stuff, we've seen places shut down, we've seen supply constraints, all that kind of stuff. I think it puts Micron in a really good position around all that as well, which we'll kind of see as we get into their earnings here in a second. So let's go jump and do that right now. And essentially what I'm doing is I'm pulling this from their earnings call from today. For me personally, I really like going through the earnings call first and kind of seeing what management has to say, what happened in the quarter, then kind of go through also what, analysts asked and seeing what the company's response was. I do also look at their presentation, and then when their 10Q comes out, I'll take a look at that. But for me, I just love going right to the earnings call to see, what the company had to say. And that's what we're going to start. So we're first going to start looking at the numbers, and then we're going to kind of see the extra color that management had to say about the quarter and the going forward. So what they said was fiscal Q2 revenue was approximately $7.8 billion, which is up about 1% quarter over quarter. Keep in mind, the company was projecting, and also analysts thought the company was going to come in around $7.5 billion. So they beat that on the top. It's a 25% year over year for revenue. So that's really good. Revenue was particularly strong in client and cloud markets. Fiscal Q2 DRAM revenue was $5.7 billion, representing 73% of total revenue. DRAM revenue increased 2% quarter over quarter and was up 29% year over year. Sequentially, bit shipments increased in the high single-digit percentage range, while ASPs declined in the mid-single-digit percentage range. If we go on, fiscal Q2 operating income was strong at $2.8 billion. Operating margin was 35%, which was flat quarter over quarter, but up 20% in prior year. So 35% operating margin is really, really good for semiconductors. I would say historically Micron's been around, say, 15 to 25%. Now, this industry, it's really important to note that it's very cyclical. So there's a period of time, it could be even a decade long, where companies in this industry just really, really struggle. So what happens is is that these companies are making chips like Micron, and then all of a sudden there becomes a huge supply in the market. People aren't buying it, and then all the supply just sits out there, and they have to mark down their product to get it sold. And obviously that's bad for margins, for the top line, the bottom line, all that good stuff. We're in a situation now, or Micron is, where over the last like 18 months to 2 years, where the kind of bear cyclical market of the memory chip industry has kind of started coming to an end and flipping the other way, and it's been really shooting up. So I would say back in like 2018, a lot of people were seeing the trend going to start pushing up with the supply going down. If you think about everything electronic, it seems like today has to have some type of memory chip, from automobiles to computers to data centers. I mean, you name it. And if you think about it, even like 5G with coming out and all these people buying new phones, there's memory chips in all those phones. So a lot of people could look into the future and say, hey, this is going to happen. Look what all the stuff's going to happen in the next couple of years. And that's what's happened. Plus, with the whole pandemic that happened, it really kind of pushed this forward even further, in my personal opinion, especially with supply constraints and everything that's been going on that we've seen. All right. So non-GAAP earnings per share fiscal quarter 2 was 2.1, down from about 2.16 from last quarter, but up 100% from a year ago. So non-GAAP earnings per share, the company has said, projected around $1.95. So coming at 214, that's a pretty good beat. So beating on top line we talked about, they beat on the bottom line, which is just fantastic. Turning to cash flows and capital spending, so they generated $3.6 billion in cash from operations. Get this, representing 47% of revenue. That is insane. So the company made $7.8 billion on their top line, and $3.6 billion of that was cash from operations. That's just crazy. And the reason for that, because right now where it's flipped, where there was a huge supply of memory chips a few years ago, that supply has been dwindling down, and the demand has been going up. So manufacturers like Micron can actually raise their prices, so that increases their margins. And so that's why they're seeing these huge margins, even their cash flow margins of 47%. That's crazy. Now that's cash from operations. That's not free cash flow. We'll talk about free cash flow in a second here. Now they are continuing to spend a ton on capex. For 2022, they're expecting between 11 and 12 billion, just for future growth on that. So another reason why I started buying into Micron is that they were really emphasizing shareholder value and really wanted to give value to shareholders. And they were talking about doing share buybacks and also doing dividends, which they've never done before. So that's what this next paragraph here is. So they completed share repurchases of 408 million, or approximately 4.8 million shares in the quarter, including their dividend payment, which returned 520 million to shareholders. From the inception of the share repurchase program in 2019, they have deployed 4.7 billion towards repurchase, repurchasing 94 million shares at average price of $50 per share. In addition, we have deployed approximately 800 million towards settling convert premiums, which reduced our diluted share count by 19 million shares. And combining the share repurchases, convert, I think I said convert before, I think it's convert, premiums and dividends, we've returned to shareholders 5.8 billion, or 64% of their cumulative free cash flow in this time frame. We remain committed to return 50% of the cross-cycle free cash flow through a combination of dividends and buybacks. And a lot of people laugh because their dividend is only about 10 cents. Yeah, it's pretty small, but I do think that attracts different kind of investors. So if they're a dividend investor, they may start being interested in Micron because of that. And I think Micron's got to show they can continue paying their dividend and hopefully increase it over time too. Now, I personally like them buying back shares, especially if they're undervalued, more than actually doing dividends. But I like that they're doing both of those at this time. All right. So now turning to their outlook for the next quarter, which is their third quarter, overall business is tracking ahead of their plans a quarter ago, and demand is strong across most markets with some regional challenges. Our improved fiscal year financial outlook is increasing our variable compensation expenses, which will impact our costs in fiscal Q3. So that's good to know. We're also seeing cost impacts from continuing inflationary pressures from supply chain mitigation actions related to industry-wide shortages. So it'll be interesting going forward. So we've seen a huge increase in revenue and profits over the last year or so with Micron. So they are saying that there's going to be some, inflationary pressures, and then also some industry-wide shortages. And even if you think about memory chips going into automobiles and other things, if those products are having shortages as well, which they have been, that will impact how much Micron can sell at that time. But needless to say, at least from my perspective, a memory chip business itself is going to really grow out into the future. It's not going to be shrinking by any means. With all these factors in place, our non-GAAP guidance for fiscal Q3 is as follows. We expect revenue to be around $8.7 billion. So they did $7.8 billion last quarter, $8.7 billion next quarter, plus or minus $200 million. So that would be a new record for quarterly revenues, gross margin to be in the range of 48%. All right. And operating expenses to be approximately $1 billion. So you get a situation where they beat on the top line, they beat on the bottom line, and then they also come out and give actually guidance as higher than what analysts thought they were expecting for Q3. So when you get that trifecta of good news, obviously that's why we saw the price go up after hours. And we'll kind of see, how it goes over the next couple of weeks. But that is all great news from Micron. In fact, if we go back to the top of the earnings presentation or earnings call and discuss a little bit more here. So they said Micron delivered an excellent performance in fiscal Q2 with levels above the high end of their guidance. We grew revenue margins sequentially while driving favorable mix and cost reductions amid ongoing global supply challenges. We saw broad-based demand for our products, with our SSD products achieving record revenue and our auto market revenue also reaching an all-time high. And they do say in this earnings call as well that they think the automobile industry over the next 10 years is going to be their biggest industry that they're going to be providing memory chips to. So kind of interesting there. We are tracking several quarters ahead of the industry and ramping products based on these leading edge process technologies. We are also investing to maintain technology leadership for the next decade and making good progress in development of future technology nodes. Micron is not only a technology leader, but also the industry and quality, with the majority of our customers ranking us number one, which is fantastic. Again, there's only 2 other companies that make DRAM chips, so that's good. Our leadership and quality is an important differentiator for Micron, particularly in fast-growing data center and automobile markets, where our quality scores are excellent. One thing I will say, Micron, I was kind of disappointed or sad about is their CFO, and I'm blanking on his name right now, but he was one of the only CFOs that I've seen that was as much in the spotlight as a CEO for Micron, and he actually moved to Intel. So that's interesting because I like Patrick Gelsinger a lot over at Intel, and now bringing the CFO from Micron, a quarter or 2 back. Well, it'll be interesting to see kind of where Intel pivots going forward. Now, Intel and Micron are not in the same industry. I see that a lot where people are looking at Micron and Intel on a comparison level, and they do not make the same type of chips. In fact, Intel did make NAND chips, which Micron does, but they're actually, I think, selling, or I think they sold that portion of their business or try to sell their portion of business just here even recently. So they're not in the same industry. So just keep that in mind, because I hear that a lot. Something else I kind of want to point it out that I saw that was kind of interesting is here. So they say that the global semiconductor supply chain is experiencing pressure due to impacts from the Russia invasion of Ukraine. The region is an important source for the global supply of noble gases and other critical minerals that are used in semiconductor manufacturing. We have strategically diversified our supply chain over the last several years and maintain appropriate inventories of materials and noble gases. We currently do not expect any negative impact to our near-term production volumes because of the Russia and Ukraine war. We do not expect an increase in our costs as we secure supply of certain raw materials, but we do expect an increase in our costs as we secure supply of certain raw materials that could be at risk. So we could see costs going up from them. So I expect revenue continue going up. Certainly, I think in the next year or two, I think demand is going to be there for that. But as far as cost goes, we may see some of their operating profit margins and their net profit margins dipping in the future because of that. Now, you know, their competitors are probably going to be facing the same type of issues. So it'll be kind of see how that plays out in the end. So I had some other stuff that was kind of highlighted here. I don't know if I want to go over the rest of the stuff that's in there. One thing I guess I will point out, I said the automobile industry for them is going to grow, or at least they expect to grow bigger than all the other ones. They expect that mobile revenue is going to grow as well going in the future with the 5G transition. But data centers actually have been seeing the biggest growth. So data centers, automobiles, and then they're going to continue seeing like the mobile revenue and mobile kind of like phones and that sort of thing as well. So I really think that Micron is in just a fabulous place right now. You know, I expected really great things from them going through 2023 and possibly beyond. And I think that's going to continue. I mean, they were saying that, you know, they're expecting, you know, growth from, you know, mid-teens to high teens percentage growth over the, you know, next quarter or so. And I expect that to continue. Now, at some point, it probably be level off. But, you know, like I said in this video, memory chips are not going away. Memory chips are just going to be more and more demand, especially the EV vehicles, and they start getting to self-driving vehicles and all that kind of stuff. I mean, the memory chips are just going to continue to grow. Difficulty thing with Micron and any kind of cyclical business, what you don't want to do is get caught on the back end, right? So it's really great if you can catch in the beginning and riding that wave up. The issue is if you're at the top and you buy in, and then it goes down, and those type businesses go down really quick as far as the stock. Micron is a very stable business. You know, they certainly wouldn't go out of business, but from a stock perspective, the forecast is huge. So according to them, it looks really strong through 2022. I would expect it through 2023 as well. So I'll keep pushing out videos like this with future earnings or anything else that comes with Micron. But, I'm really happy with it being around 5 to 6% of my portfolio. And for me, anything under $75 is a buy for Micron. With it trading around like between 85 and 90 right now, I'm not so interested in buying it at this point in time. But I have been saying over and over in other videos that I do think that the stock will be in triple digits. That's just kind of where I think it's going to go. Where it ends, we'll see. But I'm still happy with Micron. Story hasn't changed. In fact, it even looks better from what we see. And we'll just kind of see how things go. But I'd love to hear from you. I mean, what do you think about Micron? Do you own Micron? Do you own any of the other chip manufacturers or semiconductors? I would love to hear from you. Thank you so much for watching. I really appreciate it. And I'll catch you on the other side. Take care and God bless.